Hello everybody and welcome back to the Term Insurance Brokers YouTube channel. Today we're going to take a look at the kinds of life events that can either trigger the need to finally get some life insurance or for where you may need to look at reviewing your current position. First up is marriage. Whether you've just started building a life together or been at it for 30 years, your incomes are working together to support both of you. One of the most well-known uses of life insurance is to replace the lost income of a spouse when they die. A general rule of thumb is to have the coverage amount of your life insurance policy be equal to or at least 10 times the income of the person being insured. So if you're earning $100,000 per year, you should have at least $1 million of life insurance. While the insurance monies are helping maintain the existing lifestyle of the surviving spouse and family, there are many other things that insurance will be used for, such as paying off a mortgage and other debts. Next up, the thing that generally follows marriage, kids. They're expensive. You know it, I know it, everybody knows it. So in addition to having monies available to pay for things like college, the cost of raising children is just as critical. You got to pay for everything from clothing, food, and whatever the cost may be for any other typical activity of life that you can think of. What a lot of people tend to overlook is also the cost of childcare. If your kids aren't old enough to take care of themselves and be left alone for a number of hours, then that's something that incurs a cost as well. While we're on the topic of family, what about your parents? People are living longer than ever before, and getting to spend more time with your loved ones is great. The caveat to that is by getting older, that often also means more care is needed and for a longer period of time. Possibly even 24-hour around-the-clock care if there's someone who happens to also have a debilitating or chronic condition. If you're their caretaker, which a lot of people are for their parents who are in their very senior years, life insurance is a great safety net to provide funds for having a care service help them in the event that you die unexpectedly. Another common life event that many people experience is buying a house. The size of the mortgage many will take on will be dependent upon what their level of income is. Given the loss of income from the death of the homeowner, a life insurance policy can pay off the mortgage in the event of their death so their spouse or other loved ones don't have to take on the debt or immediately sell the house. And what about if you're somebody who's running a business? If you're a business owner, what happens to your business if you unexpectedly die? Your family is either going to take it over, they sell the business, or it gets shut down. This gets much more complex if there are other individuals who have an ownership interest in the business. Typically when this occurs, the owners may want to look at creating what's called a buy-sell agreement. A buy-sell agreement, in short, is an agreement amongst the owners on what will happen to an owner's share in the event that one or more of them die. Whether the ownership interest is passed on to that person's spouse or kids, or if an option is granted to the other owners to buy out the interest for an agreed amount of compensation. A link to a page on our website discussing buy-sell agreements will be in the description below. We'll also be making a video on buy-sell agreements in the near future, so again, make sure to subscribe and click the bell to stay notified of new videos. So, we've discussed about life events throughout your younger years and throughout your working life. But what about when you're ready to punch out for the last time and retire? If you've had group coverage through an employer, you may have the option to convert it to an individual whole life policy where the coverage may also be portable, meaning you may be able to buy continued coverage without a medical exam. There are, however, some major common drawbacks with both of these options. The first one is that whole life is the most expensive form of coverage, and setting up a whole life policy when you're in your 60s or 70s is typically going to be more than you'll ever want to spend, especially if you're going to be moving from your higher working income to a lower fixed retirement income. The second one is that a ported policy often may cite significant changes to the coverage at a certain age, often 70 or 75. For example, the coverage may be reduced by 50% at the designated age. Life insurance is still vital even after you retire. Many people are still paying a mortgage, they want to leave monies to take care of their surviving spouse, they want to leave monies to their kids or grandkids, paying off things like funeral expenses, medical bills, other final expenses, so your family doesn't get stuck covering them, or any other number of reasons. If you still want life insurance after you've retired, you should consider getting a level term policy or a guaranteed universal policy for lifetime benefits that are significantly less expensive than those of whole life insurance. To get a free instant online life insurance quote, go to terminsurancebrokers.com, or if you want to talk to a live agent, give me a call at 703-665-9133. And also be sure to follow us on social media, Instagram at GetInsuranceNow, and at Facebook.com/terminsurancebrokers. Thanks very much for watching. Have a great day.